I am Pious, Kojo, Backah, and those were your latest currency update. Talking about the local currency, the cedi continued to rise steadily against the US dollar amidst the Bank of Ghana's tight foreign exchange intervention. Last week, the local currency gained about 2.3% against the American greenback, although the central bank reduced its support to the market. Now, the regulator sold only $5 million on the spot market while withholding its bi-weekly FX auctions. Now, the Finance Ministry has confirmed that government has secured over 80% participation in the domestic debt exchange program. Well, this indeed confirms an earlier report by Joy Business that government has hit its target with about 86% participation. It has, however, maintained that the program is voluntary, insisting that persons that have challenges have the option not to participate in the program. Now, the statement also assured that it will honor all bonds and have matured in line with what it describes as fiscal commitments. The Ministry of Finance assured the pensioners that all government papers that are maturing will be paid. Meanwhile, Pensioner Bondholders Forum insists on total exemption. Dr. Edu Anani Inchi is the convener of the forum.
If the minister is saying, promising to, the promise is already there. You see, it's just like having given a promise on your wedding day, and every year you want to go and renew the vow. I don't understand. Your vow still stands until the end of your life. So as for the promise is there for the issuer to honor the coupons and the principal on maturity. So it's there. But we are saying for pensioners, exempt us from the program, because if the issuer exempts you, it is far, far better than you self-exempting yourself. Now we didn't tender our bonds, so we have self-exempted ourselves as a result of the failure of the ministry to do what we need. We are still saying the minister should exempt us. Exempt.
So let's make sense out of all of these. And joining me via Zoom is a senior lecturer of finance at the Cape Coast University School, Siriam Kawo. Sir, I'm grateful you could join us on the marketplace. I'm pretty sure you've listened or you've seen the statement from the Ministry of Finance. Your initial comments.
I've seen the statement and I've read the statement from the Ministry of Finance, reaching the 80% target for the bond holders so that they will reach the debt restructuring level. And so the domestic debt exchange program to the Ministry of Finance has been successful. They have maintained that it is voluntary. The individual bondholders and then the individual bondholders who are pensioners are also assured that this self-exclusion that they have done will not affect them, and that when their coupons are due, they are going to be paid, and when their maturity date has come, they will receive their returns, the capital they've invested in the bonds with government. I think that is a good news for us. Once it is voluntary and it will not affect these bondholders, they have no fears, except that they know something that we don't know, and except that they are so much aware that government will not fulfill their promise when it is due. In that way, they can take government to court.
And that is exactly my concern and worry at the moment, because government has given its word that we will honor that obligation. Now, they seem to have issues with that. Why do you think that is so?
This is usually coming because of lack of trust from the finance ministry, especially the finance minister, when they have not been consistent with the issues. If we are able to exempt the pension fund holders from the domestic debt exchange, and we are explicit to say that they are exempted, and we did not state that it is voluntary for them, then why is it so difficult to tell the individual bondholders and then the pensioner bondholders that they are also exempted from it. These inconsistencies create some amount of fear in the senior citizens, as we call them, to be so much scared about their future. But then once we have their word that they are going to honor it, and these statements are out there for the entire world to read, we just need to hold the finance ministry to their words.
And what do you think government can do to win them on their side?
Yeah, if the government is going to pay their coupons as it is, and it is going to pay the principal on the time that it is due for maturity, which will imply that they are exempted from it. There is nothing government can do rather than to totally come out with a statement that these people are totally exempted from the debt exchange situation. And for that matter, they are free and their coupons will be paid for them. Government must also note that these issues, if it is not handled carefully, tomorrow when they are going to issue bonds and they want people to partake in the bonds, it's going to affect the future bond rollout that we're going to have, because people are going to be very much skeptical and they are going to be very much scared that government might default in the payment of the bonds that we have, and there will be some kind of restructuring that will take place. There are situations where there will be haircuts because the reduction in the interest rate, the extension of the payment period, they all amount to some amount of haircut, and that would affect them. And so in the future, it will affect all these things that we are talking about. And for that matter, government to win these people back, talk to them, tell them that they are exempted from it, and pay them their coupon, and we move forward as a country. Because if they self-exempt themselves, and then you also exempt them, the end point is that it is the same issue that we're talking about, except that when it comes to marketability of these bonds, if you are exempted from it, people feel safe in buying those bonds and you can recoup your investment in time. But when you self-exempt yourself, people are not so well, except you hold the bond until it is maturity time.
Sariam, you understand this terrain very well. What next, now that we know that we've exceeded our target?
Yeah, once we've exceeded our target, what we need to do is that we now have to go to the extent. Now, this is the domestic debt exchange. There's a need for us to approach the external debt and see how we can also get their buy-in. If we get their buy-in and now we go to the IMF board to affirm the deal, the situation we find ourselves in as a country is not going to be permanent. And for that matter, if we get the IMF deal coming in and they're supervising whatever the government is doing, especially where we are entering a campaign year, 2014, election year, campaigns will be done where people use a lot of money. IMF will be able to control some of this fiscal space and ensure that the monies that we get are prudently spent. In that way, we would be able to come back as a country. As the president said, that he hope and pray that the situation in which we find ourselves will normalize and things will come to a normal situation for businesses and individuals to have a free mind to operate. Because there is so much anxiety among the banking sector, the financial sector. People do not have so much trust in what is happening. And there is so much fear about where they kept their monies and the rest. And so there is the need for the government to ensure that this deal goes through to restore some level of confidence in the Ghanaian economy.
Sariam Kawo, we are indeed grateful for your expressions and thoughts this afternoon on the marketplace in relation to the domestic debt exchange program. Grateful. Now, let's move on to some other stories. And Tullow Oil has announced that it has filed an application at the International Chamber of Commerce in London for an arbitration over the tax dispute with Ghana Revenue Authority. Well, this was captured in a circular issued to its investors this morning. George Yafe has the rest of the story.
Tullow Oil in the statement maintained that the first tax dispute covers assessment done by the Ghana Revenue Authority on disallowances of loan interest deductions from 2010 to 2020 and proceeds received by Tullow Oil under its corporate business. This ramps up to almost $200 million. The second one covers work done from 2016 to 2019, totaling over $300 million. Tullow Oil in the notice to investors noted that it sees these charges as violation of its rights under the country's petroleum agreement. Tullow believes that resolution through the international arbitration will bring some certainty which will be in the best interest of all stakeholders in the country. Tullow argued that, notwithstanding this formal step, it intends to continue engagement with the government of Ghana, including the Ghana Revenue Authority, with the aim of resolving these disputes on a mutually acceptable basis.
Senior partner at Deloitte Ghana, Gilbert Yirinchi-Ado, has joined us and will help us appreciate this situation better. Gilbert, grateful you could join us on the marketplace. How well will this referral of GRA to the international arbitration by Tullow will play out?
So thank you very much. I first would have to make a subtle correction. I'm a senior manager with the Tax and Regulatory Department. I think you have seen, or you are trying to position me into the future, but that rests with God. Okay, so with respect to the subject matter, I think that Tullow referring this to the International Court of Arbitration is well set out in the agreement that is signed with the government of Ghana. And this, in my opinion, would have been envisaged that there could be a point in time where issues, of such nature will crop up, and we need an independent party, to help bring an amicable solution to some of these things. Of course, if you look at our Revenue Administration Act, there are dispute resolution procedures that are set out in there to help resolve some of these things which emanate from tax audits. Nevertheless, to the extent that you have signed up to an international agreement, the conditions precedent in those international agreements will reign supreme. And Tullow reserves the right to either use the internal or the domestic procedures or the issues set out in the agreement, whichever is very convenient for them to ensure that some of these issues are addressed. So it is not out of place, I would say so. In any way, it helps to enhance the tax administration procedures in Ghana, as well as put us in a better light in terms of how our compliance levels are to be managed and how things are to be done by investors in this country. So it's not necessarily out of place. I think that GRA would have to put in place the argument, what they have, the facts that they have gathered to argue their case out, and Tullow will also have their legal team to address it, and this will help enhance tax administration as well as also boost investor confidence in the country. So it's not out of place. I think these are normal things that happens in international space.
Interesting. So really, will this have any signal, or will this send any signal to potential investors, knowing how we treat our domestic investors?
Great. I would say it's a 50-50 situation. Like I did indicate earlier on, these matters are emphasized at the time of signing on to the agreement that there could be possible disagreement. And if you look at the narrative or the position of Tullow, they have indicated that in spite of the fact that they've sent this to the International Court of Arbitration, they are also engaging the Revenue Authority as well as the government of Ghana to find an amicable solution to this. So, this is a very good signal where you can judge and bring an amicable solution to some of these issues. And should we be able to handle it well as a country, it then will boost investor confidence. Dealing with such matters is the key thing to either encourage investors to come in or discourage investors to come in. So the outcome of the dispute will then determine. And like I have indicated earlier on, it's all about the facts that will be presented. If GRA has a case, then, I mean globally or internationally, we are all admonished to ensure that we comply with tax issues that emanate in other jurisdictions. And that also helps to boost investor confidence. If it is the case that Talo turns out to win the case, I mean, it also enhances that process because it then gives them the confidence that where there are issues, it could be resolved amicably and nobody will be shortchanged. So it's a 50-50 situation. We cannot say that it's going to discourage investors, neither can we say that it's also going to encourage investors. It depends on the outcome at the end of the day. You would recall that government of Ghana and then the government of Cote d'Ivoire, went to the International Court of Arbitration over this maritime dispute. In the end, there was an amicable solution, and all parties were confident in what the result that emanated from such forum. So if that is done in a clear and a concise and a transparent manner, it will help to boost investor confidence, and Ghana will not stand to be shortchanged.
Finally, do you foresee this coming to an amicable solution now that we've gotten to the arbitration? Would there be an insight in that?
I think so. I think that GRA has the government of Ghana, the GRA, the Ministry of Finance, have the mechanism and have the men to help address some of these things. This is not the first time I think this has happened. We have had petroleum agreements with a lot of multinational companies, and so the precedents are there, and the end results are also facts that can easily be made, reference could easily be made to. So it is something that I think that at the end of the day is going to help both parties address issues amicably, and then the country will stand to benefit, the international firm will stand to benefit, and all parties would have confidence in the petroleum sector in the country.
Gilbert Irinchiado, we are indeed grateful for your time here on The Marketplace, speaking to us there. A reminder, you're still watching The Marketplace with me, Pious, Kojo, Backah, onto one of our headline stories. And government is set to introduce new taxes and increase existing rates on alcoholic beverages, fruit juices, mineral water, and cigarettes. That's if Parliament finally approves the Finance Committee's report on placing levies on these products. There is more in this report.
Finance Committee in its report to the House stated that the objective of this bill is to first amend the current Excise Duty Act 2014 and make it more relevant to current development. This will expand its coverage and increase taxes on some items said to be harmful to consumers. The document showed that if the Finance Committee's report is approved by Parliament, there will be a new set of taxes that will be placed on electronic cigarettes. It claims that the move has been necessitated by the increasing use of these products and its mandate to discourage its use because of health concerns. Sweetened beverages and processed fruit juice currently do not attract excise duty. However, if this report is approved, there will be fresh levies placed on these products. Government is also trying to increase the excise duty on mineral water and more drinks. Spirits and wines will also attract new taxes, as the Finance Ministry claims it wants to even the levies on alcohol content in spirits and beer sold on the market. The country is seeking to raise more than 400 million Ghana cedis every year from 2023. But some are worried how these taxes will increase the cost of these products on the market and come with some shocks for producers of these items.
Joining me to share their stance on this is the General Secretary of the Food and Beverages Association of Ghana, Samuel Agri. Samuel, grateful you could join us on The Marketplace. Now, what do you make of this development? Good move, you would say?
Good afternoon to your listeners and your very self. In fact, I would say this is the most unfortunate news that I should ever hear from this government.
Why?
Because every day we hear increase of taxes. We've reached a point where industry and consumers cannot even afford anymore. and you keep on introducing new taxes. Now, the excuse that the ministry is giving that certain products are harmful for consumption, cigarettes, yes, e-cigarettes, yes, these are the areas you should be looking at. And then perhaps a certain class of alcoholic beverages that we can increase, at least raise some little revenue from there. Because when you do that increase, we see people of astute income will still go for it. Yes, that would be right. But then to give an excuse that drinking malt is harmful and then beverages are harmful to our human consumption, and therefore you need to raise more taxes to revenue so that you can have enough money for government consumption. This is most unfortunate. Because if you look at what we are looking at, government is only interested in making the money, and by looking at the numbers of these products as they are produced, and then what is being imported into the country. As I'm telling you now, they have proposed a 20% increment of all these taxes. Already we have 18%, which is even more expensive for industry to contend with. Now, if you go back and you say you are going to impose further 20%, how do you expect these companies to survive?
So, Samuel, let me get this from you, Samuel. Is that to say that in all of these, you weren't consulted? And I will be surprised if you tell me so.
We have not engaged government in any way. Government has not engaged industry players. And therefore, if we are to even engage, there is no way we are going to accept that there should be an increment at this time of the year where all the taxes have come to the brink of its maximum.
So what are you going to do now?
We are not, the disposable income will be a problem for consumption.
So what are you going to do? What are you going to do now?
Hold on. We have petitioned Parliament to look at it, to just not just to approve in the area of these beverages and all that. What is most harmful that we are looking at, and therefore governments all over the world have been roping in income on this, is the cigarettes that people consume. Because these are serious threats to human life. And therefore, you need to make it more expensive so that the youth cannot even afford. So that those who really want to afford, let them buy it. And the risk of it is that the revenue that you generate in this area goes into our health sector to develop the health sector. But unfortunately, you are looking at the numbers in the beverage production. Something like water, for instance. I don't see how government will tax water that is being produced for human consumption. Ordinary water.
Well, government seeks to generate over 4 million cedis annually through these new taxes. So maybe it's one of the areas government is looking at.
That should tell you the background at which they are looking at how to rope in this revenue, because they are looking at the numbers, and therefore the people that you seek to impose those taxes on, the factories and all that, if this industry are forced to go to the brink of this taxes, what will happen is that most of them will fall down. This is what we are telling government, that the industries are suffering and therefore they cannot absorb any further increases. And the Ghanaian cannot afford any further increases.
All right.
So we need to be careful how we are going to tax all these things that we are talking about.
We are grateful.
We need to be certain.
We are grateful, Samuel. Samuel Aggrey is the Executive Secretary of the Food and Beverages Association of Ghana, speaking to us there on that latest development from Parliament there. That said, for the marketplace, I am Pious Kojo Backah. You can always get business stories when you log on to myjoyonline.com/business. Great stories on that portal for you.